All right, so today I wanted to go over channels. All right, so let me just go ahead and type this out for you guys so you know exactly what I'm talking about. Channels, right? Channel. Let's capitalize that just to make sure. Channels. Like I never talked about this in any of my on any of my channels in my server. I didn't make any slides on it yet, but I do want to teach you guys about this. So there's three different types of channels, right? So the first channel is a down channel. The second one is a side channel. Sorry, I'm not the best typer. But second one is a side channel. And the last one is, you guys probably guessed by now, is an up channel, right? So the way I want you guys to look at this is, oh, I did not mean to do that. So the way I want you guys to look at this is like this, right? So you got a down channel, boom, just like that. You got a side channel, which is basically just like that. And you got the up channel, which is like this. So I know what you guys are probably thinking, like, what the fuck is this? But honestly, this right here is basically what happens every time in the market. So in my slides, do you guys see my Discord server right now? Like when I switched websites, do you guys see it? Okay, for sure. So basically, I taught you guys something like this in my server, which I'll get to in a second, but it's not, this is basically another way of like kind of seeing it and perceiving it. So basically, the down and the up channel are basically our impulse moves. So if you guys who are CVs on strategy, right, you guys most likely remember this. This is going to be our down channel, right? It's basically just an impulse move, and then our up channel is our other impulse move, and the side channel is basically our consolidation. So this is the way that the market likes to move. It's not the only way that the market likes to move, but it's for sure one of the ways. So if you see an impulse move, right, it's going to consolidate for a bit, and basically the up channel is what clears the imbalance, and that's what I wanted to go over as well. So when you're using those channels, you notice that there's going to be impulse moves, and then uh like I said, consolidation, and then the imbalance. So what I wanted to actually go over with you guys today is the imbalance gaps, right? So I don't know if I went over this too much on my previous sessions, but like literally looking at these channels is the best way to look at the market, right? So if you're to look at the market like this instead of just all these candlesticks, you could literally use your strategy with what you're looking at right here. So for instance, boom, right? For instance, impulse move, right? With impulse moves, I like to see a lot of buyers and sellers exhaustion, and I did want to bring this up as well. Buyers exhaustion, right? And sellers. You guys get what buyers and sellers exhaustion is, or would you guys like me to explain it?
Can you explain it again? I kind of forgot actually.
Yeah, I got you. So look at this. Look at the up channel, right? Or the down channel. You could also look at this the other way around. It could be an up channel, side channel, down channel. But just for an example, as the example for right now, this is how we're gonna look at it, right? So buyers and sellers exhaustions are mainly gonna be for the up and the down channel, or the down and the up channel. So when we see a down channel, right? I like to define the down and up channels as just like straight impulse moves. And I know I already taught you guys what impulse moves are. You guys probably have a good idea of what those are and all that. But look at it like this. So if I were to look at this specific move right here, right? This is like an easy down channel, right? Consolidation. You see it? This is the side channel. So we got the down channel, right? And then we got the side channel, right? It doesn't, I mean, it doesn't look like it's going straight sideways, but you know what I mean, right? There's consolidation. And then the last one, you got the up channel, right? So that's how we're expecting it to go, because that's how channels work. You know, you have the down channel, you got the side channel, and then the up channel is what fills, fills that imbalance, if there is imbalance in here. And how I taught you guys what imbalance is basically when you go on the smaller time frames, especially like the 5, the 15-minute, you see these gaps that don't fill each other. So candles normally trade within each other. That's how the market likes to move. And if there's no candle or wick that fills the body of the previous candle, it is considered imbalance gap, right? So basically, going back to buyers and sellers exhaustion, as a whole candle, there is a body, right? There is a body. There is a body. And then for every body, there is a wick, right? For everybody, I'll leave this one right here. There's a wick, right? So what I mean by buyers and sellers exhaustion is when the buyers are being exhausted, that means that buyers are taking over the market, and they're still taking over, right? They're going up. You see the markets all going up and stuff. Like right here, this buyers are in control of the market because everything's bullish, right? And then basically what buyer's exhaustion is once it reaches to a point where it finds resistance, it ends up leaving a really long wick, right? These ones aren't that long. As you guys can see, these wicks aren't too long, but any wick you see is basically exhaustion. Like that's basically all it is, just the wicks, right? But the main exhaustions we want to look for are the long ones. So buyer's exhaustions are basically any of the long wicks on the top, and then seller's exhaustions is any long wicks on the bottom, right? So you look at all these wicks right here, that's a lot of seller's exhaustion. So like sellers were taking over the market at one point, and they just ended up falling off a little bit, and the buyers started taking over and taking advantage. So they just started pushing the sellers out of the market, and basically it starts pushing up. So with me,
Wait,
how I
could
like,
you explain that one more time again?
yeah,
Like with
which
the
part?
pushers.
Wait, I'm sorry, which part again, guys?
Like where you said like the like where you said something about like pushing.
Oh yeah, I got you. So you see how basically right here, right? The market's all bearish. Like sellers are in the market and they're like pushing the whole market down, right? And it's
Mm-hmm.
like they're like straight up like pushing it, like this is straight, like no
Yeah.
consolidation, it's just straight, bearish.
Yeah.
So
Okay.
basically what the exhaustion is once it's done pushing, it leaves this really long wick right here. So if you could tell, like if you were to just look at it like this, I'll use my replay. If you were to just look at it like that, like you could easily tell that damn sellers are straight in the market, right? And then now when you see it, it went all the way down, but then now you see the bar going up, right? It's going up. And just like that, like the buyers are coming back in, right? So basically how I like to look at it is, once you see that really long wick and it starts going up like that, see, this is how you know that sellers were in the market, but then as you can tell from this long wick right here, it had a lot of sellers exhaustion. So that means buyers are taking over. So when there's buyers exhaustion, that means sellers are taking over. And when there's buyers exhaustion, oh no, when there's sellers exhaustion, that means that buyers are taking. Did I say that right? I don't even know. But yeah, basically here, let me type it out for you guys.
Yeah, we'll take note of that too, actually.
Yeah. Feel free to take notes. Note takers are for sure breadwinners, man. So when there is buyers exhaustion, sellers are starting to take, right? Like that. sellers exhaustion, buyers are just like that. I don't know, I put a period right there. All right. I'll change that. Hold on. Does that make sense so far though? Do you want me to explain it a little further, or
I kind of get it.
you kind of get it?
Yeah.
Okay, so I'll use this as another example. I kind of want to just like further illustrate it more. But basically what I mean by buyer's exhaustion is like it's going up, right? You see the market going up and up and up. And then once there's buyer's exhaustion, which is that long wick, that means that the sellers are taking over and they're trying to push the market down. And vice versa. If you see the market's going straight down like this, and you see seller's exhaustion, which is literally the wick right here, that shows that buyers are starting to take over and they're trying to push the market back up. But that's, yeah, honestly, that's all I really wanted to teach you for the channels. And I really just wanted to show you why with our CV zone strategy that this is actually like it's like an easier way to learn it basically, and like it's like a cooler way to kind of look at it in like a different perspective, you know. But
Yeah.
yeah, that's what channels are. And I just wanted to compare how, you know, if this, so this, we're looking at these channels just as lines right now, right? But imagine if they're candles, you could literally still do our strategy with it, right? So this is the impulse move. You get your Fibonacci, you match it from high to low, right? Usually the consolidation would happen up here, but like, you know, just for the picture, we're just gonna leave it right there. But basically, this is the impulse move, right? All the consolidation happens literally right here. So you got the impulse move right here, blah, blah, boom, boom. And this is the consolidation, which is the side channel. And then 4 to 5, this right here, this is the up channel right here. Make sense? So basically, like our CV zone strategy is basically, yeah, it's like it's as if you're looking at it as if there are channels, like literally down channels, side channels, and up channels. 2, 3, and 4, that's literally consolidation. It might not look like it because like it's literally like actually moving, but if you're to like go in like different time frames, you could see like it's straight consolidation because I like to look at anything like between the CV zone and the 61 to the 50% line, anything in between here. That's going to be my consolidation until it retests the CV zone. And then this right here, 4 to 5, that's our up channel to basically fill in the 1 to 2 down channel. And what I
Yeah.
mean by that, do you have any questions so far?
No, not really. I actually get it.
I actually do have a question.
Yeah, what's up?
So, does a down channel or an up channel mean anything as far as trends? Like, is it almost always gonna signify consolidation after it, finishes?
I wouldn't really say it signifies trends. For me, when I look at trends, I really do like to go to the higher time frames, and then I like to go in the hour to find that specific channel. But the only reason I like looking at up and down channels is because it's for like quick little impulse moves. So just because it is an impulse move, it doesn't mean it's going in a trend. I just like making moves and finding my positions to trade after that impulse move had happened. Did I answer that right? I'm so sorry if I didn't.
No, yeah, you're good. So would it be better like in the short term?
It'd be better short term, yeah. Because
Okay,
like
cool.
with the strategy, it's like it's for sure you're just looking for the right setup, and once that setup does happen, this is what you're gonna be looking for. But yeah, if you like trading trends, I do highly recommend looking more at the 4 hour and the daily time frame. These are where you could find trends because literally if you were to use if you're to use the channel strategy, actually it does work in every time frame. Like if you're to look at it like this, like here, hold on. How do you edit this? Here we got the down channel, right? I'm gonna make this thicker.
Oh shoot! I didn't know you could do that.
Yeah, so you got the down channel, right? And then this most likely is the side channel right here. And who knows, like this could be the up channel. And then like if you're looking at it like this in the higher time frame, it shows that all right, you could go in the smaller time frames now to find positions. Because if you're to look at the daily time frame and see that this is what it's gonna do, you could easily go in the smaller time frames. Like, all right, so now you know that the market's overall gonna be bullish since it is in that channel. So now what you want to do basically is stay in the smaller time frames to find buy positions, because you know it's overall going to be in a buy. Your bias is going to be for the buy. So now what you want to do is look for these impulse moves within these channels, and that's where you want to like, place your buys. So that's what I like doing. I like going the higher time frames to spot out trends. But you can also find them on the smaller time frames, but it just really helps to go on the bigger time frames. So once you spot that trend, you'll know that all right, the market's not going to go down. It's just going to keep going up and up and up. So I want to find impulse moves within the hour time frame so I could find my best buys. Like as if like for instance right here, this is like a perfect example. So if I know that on the daily it's doing a down channel, side channel, up channel, I'll know that all right, I can go on the hour time frame, look for my setup. This is a really good impulse move right here. Really good, right? It has perfect buyer's exhaustion, perfect seller's exhaustion, right? My impulse move. And now with the strategy, all I'm looking for is it to break up towards the 61.8 and the 50% line, come back down to retest the CV zone, right? Play around here, like somewhere, just anywhere around here. It could even go up here if it wanted to, but all I know is it's gonna be here, go here, and then go up, right? That's my overall bias, because on the daily time frame, it already looks like it's making the up channel, like as of right now, like it's making the up channel as we speak, right? And if we go in the smaller time frame, that just adds extra confirmation to my CV zone strategy, because I've seen this strategy happen so many times. It's a perfect impulse move, right? Not to mention I have confirmations with recent retests of the CV zones, right? So I got extra confirmation on top of extra confirmation. So like the more confirmations you have, like the less of a gamble it is, place trades. But as of right now, I am looking for it to, go up to the 61.8 and then back to retest CV zone and shoot up. Actually, am I on the replay right now? Oh, I am. All right, see. Let's see if my strategy worked out. If it didn't, it's okay, because all right, right. So it's doing exactly what I said, right? Okay, see, if you would have placed a stop loss right here, you probably would have been smacked out. But if you kept your trade in, you'll see what happens. Boom. Oh shit. But yeah, right here. So if you wouldn't have gone stopped out, like if your stop loss was deeper maybe, or if some people trade with no stop losses, this is what would have happened, right? You would have got in for the buy limit entry and the sniper limit entry if you would have gone in both of them. And just like that, here, where's the tool? Just like that, you would have got in, bloop, nice little 100 pips off that. And that was within like literally like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Like about like, that was about like a day, 13 hours. But still, that's what like with my strategy, like I'm a day trader, so like I'm okay with holding my trades. If you get a little anxious and like you don't like holding your trades too long, you'd consider yourself a scalper. You easily could have gotten in this one right here and probably scalped it up here, or you probably could have gotten in again right here and then scalped a little bit up. But like this took a couple hours, so like I wouldn't like doubt if you got a little anxious, because when I first started trading, like I would get hella anxious too. Like even though I know my strategy would go into play, I would still be anxious and I would want to pull out early. But sometimes that's the right thing to do, sometimes it's not. But just know that if you pull out early and you see it go your way, you can't really hate yourself for not staying in that trade, because like that's just how you felt at the moment, you know. Going on from there, I did want to also talk about, yeah, like imbalance gaps again, right? So we got the down channel right here, right? Down channel. That's a really nice looking down channel, right? We got the side channel, which is all this, literally all this, right? I'll just leave it like that. Or just, yeah, you know what I mean. And then we got the up channel. So honestly, looking at this, it made this move. I wouldn't doubt if it kept going up, right? I wouldn't doubt if it kept going up and filled this imbalance right here. So let me actually take, okay, so now this is where the market's currently at. So I really wouldn't doubt if it kept going up to fill this up channel. So that's a good way to explain it. For every up channel, there has to be a down channel that basically like correlates it, not correlates it, but basically like mirrors it. So for every down channel, there has to be an up channel that flips it, or for every up channel, there has to be a down channel. But in between those channels, there has to be consolidation, which is the side channel. So I really do want to teach you guys more about the about imbalance gaps, because with imbalance gaps, it's really cool because you can use these as like entries to place your trades, or you could use them as like take profits or stop losses. You know what I mean? You could use them for multiple things. And I'm pretty sure you guys don't know too much about imbalance gaps, so I'll try to teach it to the best of my capabilities for y'all. Right here, right? So of course on the hour time frame, you see a fat imbalance gap, right? That's why I don't really like using the hour time frame, and like, you know, for in the 4 hour, in the daily, and the weekly. I don't really like using these for imbalance gaps, because you'll obviously see them, but that's just how the market moves, right? To spot out the real imbalance gaps, oh wait, I consider that an imbalance gap because, you know how I said before, candles normally trade within each other. As you see right here, it traded all this, but there is no wick or body that filled all this imbalance right here, right? So on the hour, of course, it's going to be an imbalance gap. But to see if it really truly is an imbalance gap, I'd recommend going straight to the 5 minute, right? So if you go on the 5 minute, you'll see the real imbalance gaps, right? So these are kind of small, but they are considered imbalance gaps, right? That's an imbalance gap. This one's just a little bit, but not really, right? But, and we also got this one right here. This one actually stands out, to be honest. That really stands out, because that one's actually bigger compared to these ones. But that kind of just shows me that, all right, so whatever price does, it's gonna want to, like, you know, fill these eventually. It doesn't have to be right away. It could be minutes, it could be hours, it could be days, weeks, months, until it comes back to fill it in. But just know that the market's gonna fill it in. You know what I mean? Sometimes it doesn't. Don't get me wrong. Don't get your hopes up if it really doesn't. But just know that I'm gonna say a good like 90% of the time, like it's gonna come back to fill that imbalance gap. So of course on the hour, you know, it looks like an imbalance gap, but in reality, if you're to go to the 5 minute, it's not too bad of imbalance. Like, because if you're to look at it, like these candles are trading within each other, but it's just like it leaves just a slight bit of imbalance. You know what I mean? Like right here, and then this one right here. This one's gonna get filled really soon. It looks like it. It looks like it's about to get filled right now, if anything. But just know that I really like using imbalance gaps, because how I used to trade before, um, I actually used to do this, right, and this is what I'm looking for. And instead of, oh, what the fuck is this? Oh, Zoom coming in clutch. So apparently, if I don't have like the Zoom Premium or whatever, like these meetings can only last 40 minutes. It's kind of but fuck it. Um, but basically, like how I used to look at it. So basically, I would be like, right, I tell you guys only use the 50% line as a take profit, right? That's where I want you guys to exit your trade, and that's where I want you to get your bag and dip, right? But if you're feeling a little, what's the word? If you're feeling a little, special or some shit, you know what I mean? Feeling a little risky, then you could always use these imbalance gaps as your take profit instead, right? So you could be like, instead of using this as your TP, I want to get a little bit more pips. And like with my analysis or with your analysis, when you like, start trading for like years and years to come, you'll know how the markets like to move, and you'll learn it and you'll master it. So if you decide like, what, I don't really want to settle for per se, 95 pips. I want to settle for 166 pips. I mean, you could do that. That's another reason why I really like to use imbalance gaps, because it shows you other places where you could possibly put a take profit, other places where you could get an entry possibly. Like I could probably get an entry like somewhere right here, right? Because I know price is gonna come up here. You could even put a buy stop here if you trust that it's gonna go up here. Just put a buy stop like probably like at this line, and then like it'll just go up, there's like many different ways you could trade, but if you're first learning, I do recommend trying out these methods. You don't have to, but just know that it works for me, so I guarantee it'll work for you. Let's see any questions so far?
No, I understand it.
Okay,
It's pretty good.
for sure.
Oh man.
All right, you better go on the Viking trip soon.
Yeah, I'm gonna go bike still. We biking hella late.
Dude, I need myself a bike, to be honest.
Oh yeah, man.
All right, let's see, going on from there. um Just a quick question. Are you guys more of alerts? Are you guys like, do you guys like using alerts more, or would you prefer using limits
Honestly,
or market execution?
after you mentioned it last time, I started doing more of like market execution.
Mm-hmm.
Like I've been using like my alarms to like notify me that it's where I want it to be at, and then I just do a market execution from there.
Okay. What
Yeah.
about you,
For me,
Swish?
like in terms of the season strategy, I like using the alerts, but only if
Mm-hmm.
it's like I don't know about like an hour time frame, but like 30 minutes for sure. Yeah.
On a 30-minute, yeah. I'm not gonna lie, I for sure started using the 30-minute time frame more. Like I use my hour to spot out the down channels and like the up channels, which are the impulse moves. And then I like using the 30 minutes to find my entries, because when you yeah, like for like per se, if you're to use the hour time frame and you're to see something like this happen, right? Like, all right, it's gonna come down to retest, and you don't know when or how it's going to retest. I mean, you'll know when because you're going to see it come down, but you don't know how it's going to retest. Maybe it wants to keep going down and retest somewhere down here, or maybe sometimes it just does retest just the top line and then it'll go shooting up. That's why I like going to the 30-minute, because with the 30-minute, it shows like more like it basically shows the reversal pattern like more, like more vivid to the eyes. And especially if you're to go to lower time frames, like you could actually see it. Like you could see the reversal patterns, right? You have like a little nut right here, right? All bearish. And then next thing you know, you see a bullish candle. And that's probably where you want to place your buy, right? Because you think it's going to retest, but it ends up retesting again and it consolidates, right? And it comes down to retest another time. And then you see this happen, right? But what happened? Okay. But anyways, yeah, I like looking at the lower time frames because I haven't really taught this either in my server, but I feel like eventually I will. I'll make a slide about it. But I'll teach you guys eventually about like reversal patterns and like how I like to see them, because like like with this strategy, I like to look for retesting. And when it does retest, this is basically a reversal pattern. You know what I mean? It doesn't just go up or and up and then down and then keep going down. You know what I mean? It goes up, down, and then for a retest, it has to make a reversal pattern to go up. So lower time frames for sure. You can spot the reversal patterns better. And what I mean by reversal patterns, I literally mean just like, all right, you'll see a whole set of candles straight bearish. And then next thing you know, you see this seller's exhaustion. There's just that one buyer's candle, right? And these right here, you know, another trader once called it a gambler candle, right? So this is another way that people like to trade. If you find gamblers candles within the CV zone, like the CV zone area, that's smooth. That's probably like the best trade you could possibly get. But what I mean by gambler's candle is like, yeah, you'll see like one straight bearish, right? Or it could be the opposite. It could be like just like straight bullish candles. But then out of nowhere, you'll get that one bearish or that one bullish, right? So you got bearish candles, then that one bullish. And basically where you want to buy is right when this candle ends. So right here, 15-minute. Actually, we could probably go 5-minute. Yeah, I mean 15-minute or 5-minute. It's really however you want to see it. So you see all these, right? All these, it's straight bearish, all red candles, right? And then next thing you know, you get this little bullish candle right there. That one is blue, straight blue, right? Straight blue. This shit is red. And then basically where you want to buy is literally, since this is the 15-minute time frame, you want to wait until this candle ends. So how the candles move, right? So it gets to this point, it goes up, down, right here. Next candle, up, down, here. Next candle, down, up, next candle, down, up, and this is where this starts. But you don't want to place your trade yet. Maybe you would want to place your trade because it is in the CV zone, but this is just another way to trade through gambler candles. So it goes up, right? Or it goes right here, goes down, up, goes back down, and this is where it ends on the 15-minute. This is where you want to place your buy, right? If you're doing the gambler candle strategy right here, that's where you want to buy. And then you literally want to make your stop loss just below the last wick. Like literally right here. This is where you want your stop loss. Right. It's like anywhere in that area, you know? And this honestly, like after I learned this strategy, I do see it happen quite often in the market. It actually does work. So imagine if you were to place your buy right here and have your stop loss down here. Like, yeah, you would have placed that buy, it would have went straight down, right? You would have been in drawdown, you would have been in the negatives, but you know that your stop loss is down here, right? So it keeps going, right? Next thing you know, boom, it's shooting up, and now you're in profits. So this is where you could be like, all right, you're already like, for instance, for example, you're already like $100 up. You could close that out, call it a trade, or if you're feeling risky, just hold that trade because you're already in profits. It never hit your stop loss because this is a gambler's candle, right? You got it in the gambler's candles trading setup, but you know you thought you're gonna lose. Some people would probably like feel hella eager and they'll probably pull out, but you're different, right? So you stayed in that trade. It's starting to go up. Now you're in profits, right? I love to enforce breaking even, bro, because um the market really loves to move however it wants. It doesn't give a fuck about anyone's feelings. So I highly advise to like break even, because imagine if you were to get in this trade, right? You're in profits now. So if you don't feel like pulling out and grabbing whatever profits you have, I mean, I'd probably pull out because like this is already like 200 pips. Or no, actually, wait, no, I'm tripping. This is like 30 pips. As a scalper, 30 pips is fantastic, right? But as a day trader like me, like I'm aiming for the high pips, bro. Like just to be honest, bro. I'm aiming for like at least 100 pips. Like no cap. Like I want all this right here. I want all that smoke. So like I would hold that trade, but since I'm already in profits, since I'm already in a winning trade, why make it a losing trade? So instead of having your stop loss right here, since it's already in profits, just move your stop loss to break even. So if it comes down, you won't win anything, you won't, but at the same time, you won't lose anything. You know what I mean? And if it decides to keep going straight up, that's a dub, and you aren't risking anything. Now you could close your MetaTrader 4 and just not care about it the rest of the day, and just once you open back up, you can see if you smash TP or if you just broke even. You know what I mean? You're not risking any money. So I do highly advise to break even. That's like the number one thing I'd like, to be honest. Like I'd fucking, you know, I'd I'd dude, I can't even speak right now, bro. But that's just what I like to advise. There you go. I think that's good. But yeah. Other than that, you guys have any other questions?
Can you look at Euro USD?
Yeah.
I have a setup for it.
Me too right
I'm
now.
thinking it might go up. Well, I think it might make the gambler's candle later on, but then I think it might shoot up.
And do you know a little bit about gambler candles? Like you watch the videos, right?
Yeah, I watched it. I watched it a bit too. Yeah,
Okay.
he like explained it how you explained it as well. So it's pretty
Exactly.
understandable.
Yeah. So
Yeah. My fib is on like around there.
okay, if I'm gonna be
I
honest,
don't
this
know.
this is how I would look at it. Like from first bat, this is how I'm
Oh
looking at it,
shoot.
right? And
Oh shoot.
this is honestly doing the strategy
That's
perfect.
pretty nice. What the hell?
Right, like this is perfect. So I think it's like literally about to smash TP within the next hour or two, bruh.
Wait,
So
but it kind of did already retest, but I don't know. It's not really a clean break though, huh?
no, this is a clean retest for sure. It
Oh,
for
it
sure
is?
retested right there. It broke our 61.8, and now it's doing our thing, right? I'm gonna try to look at the higher time frames. See, even with this time frame, it for sure looks like it still wants to go down on the daily time frame. Yeah, it looks like it wants to go down for sure. And let's see if there's any imbalance that we gotta look out for here. I really want you guys to like start back testing more, and honestly look for these imbalance gaps, look for these like impulse moves, look for these channels. And I'm telling you, just like if you were to just like train your eyes to look at all this and everything I taught you at least like a good hour or two a day, like if you're to bring this into your future, like trust me, it'll be worth it. So I wanna try to look for like impulse or consolidation, not consolidation. I want to look for imbalance gaps, right? So obviously on the hour time frame, you could see imbalance gaps easier, but like they look like imbalance gaps, but truly they might not even be imbalance gaps. So I want to look at the smaller time frames to see if they are true imbalance gaps. So right, we got we got an imbalance gap right here, literally here, right? Actually, and honestly, when imbalance gaps are this small, I'd personally not count them as imbalance gaps, to be honest. Like this one I'd count as an imbalance gap for sure. Right there. Can you guys like see what I'm seeing though? Like, do you guys understand why I'm calling these imbalance gaps?
Mm-hmm.
Yeah.
Yeah.
Okay, for sure. This one, oh my god, that's a fatty. Shotty got the fatty right here. This is an imbalance gap. Fat. That's a fat nut right there. You feel me? All right. And literally, look. What did I say earlier, bro? What did I say? Why I like to use imbalance gaps, not only for confirmation, but as another area to like place my entries, my exits, all that. So look at that, right? I'm on the hour time frame. I had my imbalance gaps marked up. These are imbalance gaps. These are like for sure imbalance gaps because I looked at it in the lower time frames. So if you were to quit the replay and see all this, look, that's just extra confirmation that it's going to come down here. Not only is it going to smash TP at my 50% line, but it could go down even further. And if I want to get that extra, if I want to get that extra, that extra 4 pips, say less. I'm gonna get that extra 4 pips. You know what I mean? So that's a really effective way of using the imbalance gaps. You know what I mean? I really do want you guys to go home tonight, or if you're already home, just like after this session, just look at the market, start back testing, look for all these things that I taught you, and I promise you, like, it happens over and over and over and over again. Like, history repeats itself. So this shit happens all over. Um, it happens everywhere, every time, every day. You just gotta like train your eyes to like, you know, train your eyes to like learn it. And then again, trading is a long-term thing. So it's not like you're gonna get rich overnight. You gotta wait and be patient. You gotta master the skill set, because if you think about it, trading really is a skill set. It's something that you learn, and then it takes years to master. You know what I mean? It doesn't take a single night for you to like be the best trader in the world. You know what I mean?
Yeah.
But honestly, yeah, that's about it, to be honest, for today's session. I do have somewhere to be. Is there any other questions I could answer before I head out? I'm really sorry I had to end this early.
It's all good. But no, I don't really have any questions. It was a good session.
For sure. This whole thing's recorded, so if you guys want me to send you the video personally, I'll send it back to you guys again.
For sure.
What about you, Swish? I think Swish is AFK right now.
My bad. What'd you say?
I was about to say, that was about it for like today's session. If you want me to like send you the recording, if you want to just like look over it again, feel free to ask me. I'll just send you the whole recording. But I do apologize for having to leave early. I was just gonna ask if you had like any questions before I head out.
No, yeah, I'm good. Yeah, I appreciate you doing it. Definitely did learn some new stuff. So yeah, thank you. Appreciate it.
Okay, hell yeah, hell yeah. Appreciate you guys for coming tonight. You guys have a smooth one. Peace it.
Peace and
All
love.
right. Later.